What's good, YouTube? Welcome back to the channel. It's your boy Keno Brown, and we're here for another video, man. It's such a pleasure to have you, and it's another great day to be great. In this video, I got someone special for you, someone that can teach you how to make money in the markets. Besides me, I know I do it all the time, but this guy, he makes payout like it's lunch, man. He eats payouts for dinner, bro. Listen, his name is Divine Williams, aka Smartmoneygoat. He's accumulated multiple payouts on Top Step. He has 6 figures under management, and he's here today to teach you how he is able to do all of that in his strategy. And I'm here to give you that package. So let's get into the video. Let's go. All right, my guy Divine is about to break down his strategy that allows him to make consistent profits from Top Step every week, month, whatever. Let's get it, Divine.
Yes, sir. So yeah, I'm Divine. I've been trading for a couple years now, going on 4 years. Gonna break down my one of my favorite strategies under 1 minute, similar to what a lot of you guys probably know. I've actually learned through, so I've self-taught, but learned through ICT and a little bit of Phantom FX. So if you don't know who those guys are, definitely look up on YouTube because they help a ton. But most of it is implemented myself. So what I'm gonna do is just go over a few of my trades that I went through this week and like implement and break down how everything happens. So all I'm gonna do is go to my 1 minute right now. And if I'm moving too fast, Keno, you got any questions, just let me know.
Got you.
But I want to go over a buy that I took on NQ on Friday, actually, this last day of the week. And essentially, when we talk about this stuff, I like to make it really simple for people. It's really the entire move that I caught was this move right here. And essentially, what I'm looking at, I go from the daily down. And the reason I look at the daily is not because I'm looking to day trade the entire day or the entire week. I'm just trying to figure out where, based on targets and based on liquidity in the market, liquidity meaning orders. So the market it moves in orders. You have to have a buyer for every seller, a seller for every buyer. So when we look at levels like these highs and stuff like this here, or these highs here, right here, we understand like, hey, this is liquidity and it's a reason why price actually went up there to grab these orders. So on this Friday, I can bar replay it actually. That might be a little bit better. On the daily, let me just break that down. What I'm looking at is one, price has tagged into a nice level of demand of some sort here. We took out this level here, so we are officially like truly bullish. When we were here, I was actually looking for a pullback for some buys, and now we actually came up here to take out this level here. Now, once you take out levels of liquidity, more often than not, you will look for a pullback. For example, here, we blew through this level and then we blew through this level, but now we are starting to get a slight pullback, and that's pretty normal. And we're just looking for a level to come back. But on Friday, of course, we wouldn't know that. So as far as I'm looking at on Friday, if I can replay this really, when I'm looking at the 4 hour on this day, I'm trying to figure, I can't really see too much here. All I see is a big push, a pullback, and now we either potentially take the highs is what I want to see, or we actually react from this level and then we continue lower. So as I go down to my 1 hour, the only thing I'm really looking at here is a few things. Where is the liquidity in the market? Why did we get this pullback? And then where are we currently and what can we target short term, especially if we're trading the 1 minute? What can we target? What's a low hanging fruit target? I always talk about low hanging fruit. And essentially, if we actually break it down a little bit more to the 15 minute, which is what I did in real time, is we had a level. The way I look at this is to determine the direction on the day. I'm looking at, okay, like, do we have any levels that are important? Well, this level pulled back. We created a high in the market. That's our structure. And then we actually did was come down here. We had some consolidation, which is what I love to see, and then we broke that level. That shows intention on the seller side that, hey, buyers are no longer in control at the moment. But as we know on the daily, remember that large leg that we have, we want to keep in mind that we are still in that position. Now, what I'm gonna break down something that I'm gonna show you guys something that's really, really like keep it to myself, but it's called the cycle of liquidity or liquidity cycle that price usually goes through. But let's get to the trade first, and then we'll go from there. So as we break down here, all I see is price pulling back. And this was Thursday. And I'm just trying to validate why all of these things happen. And essentially, we were in the middle of this. We reacted from a level that created new highs in the market. We consolidated. We probably had a wipe off kind of scenario. I don't trade it, but I know what it is. And then we continue to the highs. Now, as far as our level here, remember this we are bullish, but this level can't hold because this level gave us what? A break of demand here, a break of demand here, and it took out some lows. It did respect these lows. So when we got up here, I just wanted to see what we can actually kind of have happen and what we would go to. So as far as the sales go on the day, like for the pro trend, I had a feeling we were going to sell off. But what I didn't like was that these Asia highs were still resting here. That's pure liquidity. That's a bunch of people who entered sales here in the market, bunch of people who got buy orders waiting for a breakout. It's a ton of liquidity sitting in that area. So we want to take that liquidity. So as we go to our 1 minute, that's my target. That's what I want to see. I want to see something happen there. Now we are currently, let's see. I want to make sure I remember exactly. This is 8:57 a.m. Actually, this is wrong. Let me change that. New York. I usually trade on Top Step, but so yeah, we about 5 in the morning. So let's speed this up. Make sure we can see what's going on. So as we can see here, price is giving us. We swept these Asia lows. And again, this is my target right here. This is my low-hanging fruit target for the day. I don't think we could get the high. It's Friday. This may be a target for the week. So essentially, I'm just waiting for something beautiful to happen, waiting for something interesting to happen. And on top of that, I'm waiting for that 8 o'clock to 8 o'clock Eastern time, really 7:30 Eastern time. I'm looking for like scalps and stuff. And then going into like that 9:30 New York Stock Exchange open, that's when we start to see those true moves. So if we go to the 1 minute, I actually took a bunch of trades going into this day, but I'll show you the one that actually gave me profited me $3,000 on my challenges that I'm on currently. So as we are around 7:30, and I just got to remember this price action as well. So as we are around here 7:30, let's see what we got. We are essentially during this time, I'm really just waiting. I'm just patiently waiting to see what's actually going on. I'm not really looking to do nothing fancy. I'm not looking to go crazy. I'm just trying to validate why price is doing what it's doing, and I'm walking through. And in real time, all I'm looking at is, hey, this is literally what I'm doing. I'm like, hey, I don't trade trend lines, but I know exactly what they do and how they work. We got a trend line here. If we break this trend line, two things can happen. We could react from it and continue and get that push that I assume would happen because we are at this level and we don't get our daily target, or we can give a false break of some sort and then we come up here and start to make moves to the higher to that high that we were looking for. So though I don't trade trend lines, it is very important to understand different levels and different ideas of strategies because this is not that it's a trend line. The fact is we have a stack of orders here. So as you can see here, let me turn this on really quick. We have a stack of orders here, meaning we have all this kind of, I call it a demand chain. You have this eventually after the third mitigation, I'm more than likely like, yeah, that chain is going to be broken. And then we may get a sweep of that liquidity, take out all these orders, people who got stop losses at they scaling in they trades, they actually moving a stop loss to break even, all these kind of things we do, but understanding, hey, this is liquidity. That's why price wants to break that level. It's all subjective, but at the same time, it's pretty simple. So as I seen that, I became very interested as we broke that level, and I took a trade here. And this is I'm going to show you one trade, but I want to tell you why I took this trade. And the reason being is, if we go to a higher time frame, this was more of like a we reacted here, and what I wanted was this. So I wanted this fair value gap. And the reason being is when you come to my strategy, we looking for as we go deeper into this, we're looking.
Can you
Oh yeah, I
zoom in
got you,
just a
brother.
little bit on the fair value you got, bro?
Yep, got you. So as when we're looking for my strategy, or when I'm breaking everything down on the 1 minute, I need a few things to happen in order for me to be even interested. And I need a sweep of liquidity. That's number one because I rather see a sweep and then let those orders be taken, and then I know my order one can be filled, and number two, I could be moving with banks or whoever, market makers, whatever you want to call them. I don't really care. Whoever is moving price in that direction strong, that's who I want to move with. And I just want to catch a little piece of what they're offering, and then I'm out of the market. So remember, our target is up here. We need that sweep of liquidity. The next thing I need is displacement. And displacement, if you trade smart money concept, you trade in general, especially the way we trade, displacement move is you have candlesticks, right? And then let's say you get a shift in the market and it's like this, and that candlestick is pretty much like this. Now, it can be multiple candlesticks. It could be two of them. It could be three of them. But you want to see that strong move like so. You want to see that low be taken. We get a little consolidation, and then immediately we get fair value gaps here. We have one here, and then we also have one down here. Now, the reason I looked for these levels is one, because it's a because of the fair value gap. Two, because the orders were entered here, but price didn't like that. Price honestly did not come back down and actually tag us in. We were looking for something like this right here, and then looking for, price to actually go and take out, remember, these highs. So we were looking for a potential 8-hour trade or so, but that didn't work out. So what I did do in order to actually get in here, because I believed it was a low, I waited for price to give a slight pullback and show some signs, but it never actually came back. So what we ended up getting was this wick here. Now I did enter this trade, and this is not truly this more discretionary. But the reason I entered this trade is because we got this. All I was doing is not going for our true target, but hey, early in the session, if I could catch some volume, we pulled up, we pulled back. Soon as we so let me break it down. The same way we swept liquidity here and we took a high and I looked for the pullback. If you don't know what a fractal price is, if I was to go on a 15-second to 30-second, essentially what price did was right here was sweep liquidity with this wick, right? If I can zoom in a little bit more for you, sweep liquidity. We broke the level that gave us the pullback, which would have been this high, which will be considered. So this is our sweep of liquidity. This is the high that we would break. This is our sweep of liquidity. This is the high we would break. And then as we break that high, all I want to do is I want price to come back into this level, like deeper into this candle, kind of right here. And then all I'm going to do is put my stops. I think it was a 10-point stop right here. Boom. And then we go for a nice 1 or 2 or so. And then that's all I was looking for. And I believe it was like a little under 1 or 2, but that was it. Cool. That was a trade. Now the original target would be up here. But for me, I'm not the way I'm strategizing, I'm scalping in a sense on the 1 minute, but I'm also taking my profits. And the reason I'm doing that is because earlier in this week, I had 3 trades on a day where one trade I was up a 1 to 4, I was up like $500 or $600, got broken even when I knew prices in the consolidated zone. I should have took those profits. So going back in my journal and actually saying, hey, listen, we could have just took this. It was only 8:30 in the morning. Like it's super early. You could have took that. You had a full, 3-hour session left based on our strategy and how we look at it. You got to be able to like use that discretion. So this trade here, yeah, it profited us some money, but it actually didn't get to our target, and I wasn't interested in that target yet. If I was to get that 1 or 2 for the day, I was happy with it. I'm not looking to make the bangers all the time. And that's what I only learned that from journaling and realizing, hey, we are up 1 to 2 hour, we up 3 hour, we up 4 hour, and we not taking profits. We letting ourselves break even. It makes no sense. We here to make money. So that's how that trade went. But as we go further in this day, I was interested in price here because we started to get a pullback again. We swept some lows. It's the same thing over and over. Swept some lows. We break a high right here. We get an entry here, but this entry started to play around. I actually got out of the market. So as the market started to play around, I think it pulled back and I got out like around here. But it'll pull back in a second. So once price started to pull back on this candle right here, this dark candle, I got out. I'm like, hey, it's not high quality. It's not looking good. Let's see what we could get. So now what I'm looking at is, again, we got our leg, right? We still got a target for the day. Now, mind you, I'm being conscious of like, if we go back to let's go back to the hour time frame really quick. I'm still being conscious, kind of gave away what happened, but I'm still being conscious that again, this level took out a low. We may just respect this high. We may just take out these Asia highs and then continue to respect this level and then move along, right? I understand that and I'm still realizing that. But more so than not, what I'm looking for is like, hey, how can we get to those highs? Are we going to get there? What levels will propel us to that level if we're not there yet? Price has a couple things going on. So we have our extreme level, and I like our extreme level. All I'm going to do is take those fair value gaps, and I'm going to drag out a nice level of demand to the lows. That's what I did exactly. Now we have a high quality level, and then we have two high
Is that a
quality
fair value
quality
gap
levels.
right there that you just drew out?
What is that?
This one here.
That green box that you made. What is that?
So this green box is like a pure demand zone. So it's like a point of interest. It's more of like, hey, when price get to this level, we like this level. We want to see what we could do from here. If for some reason I wanted to just take a risk entry off this level, this is what it would look like. Because this is how I trade on the 1 hour as well with my day trading strategy. So I'll have a point of interest, a level that swept liquidity, a level that has displacement. And then once if it's in a discount of this level, which I'll go into next, then we could take a nice risk entry as long as it's pro trend off of here for the moment. So that level, yeah, we have a fair value gap down here, but we also have our level of demand from this level as well, because this is a level that swept liquidity and then made a nice move to the upside. So I'm deeming that a demand zone. I'm deeming that a level where we have a fair value gap. Now, the last thing I want to add in there is our confluence, where I'm taking my fib out. I'm going from low to high, right? So once we create this high, I'm already like mapping it out. I was like, okay, my 0.618 level, which is like a for ICT, it'll be like an OTE entry. But the problem is this range is large, right? It's like very, very large. So I'm not willing to enter on this level here and have my stop down here. And it's still a 20-point stop, but like the risk to reward
That's
or
a
not,
big
it makes no sense
stop
for
loss.
yeah, it makes no sense for me to be on a 1 minute if I'm not going to get at least a one or two or something like that.
Right,
That's
right,
how I
right.
see it. Now, a 1 to 3, beautiful. Even honestly, a 1 to 1 is beautiful. But in a situation like this where I have a bit higher probability trades, I trade inducement. I can't explain inducement at the moment, but again, it's another liquidity concept where if we're looking at, okay, what would price want to take? Well, I want to see price do some, I want to see price take this low. Now, I mentioned the liquidity cycle before, and I'll try to do a really quick keynote because I know I want to make sure we have time for more stuff. But as far as the strategy go, when remember, we're looking for three things. We're looking for a sweep of liquidity. The way you deem something a sweep of liquidity is you have a level, like for example, you have this level, right? This high was a high in the market. It was orders there. People entered. This level got swept slightly. The reason we know it's a swept because of what happened after. And when what happened after is we have a level of demand here, which made a new high, which made this high. Once we actually we pushed through that level and we created an entire level of like just pure fair value. Like it just eliminated and it just took away invalidated these fair value gaps over here as well. So this is our displacement. So now we could deem this a true sweep. We could deem this something interesting. Now that doesn't mean I'm going to trade off it, but let's say, for example, when we talk about our liquidity cycle, let's say we're bullish, right? Let's say we took a low, we're bullish. Boom, we take a high. Now, actually, let me do it this way to explain it. Let's say we're bullish and we have higher highs and higher lows. That's how everybody sees the market. But it's a lot deeper than that. When you have, let's take this same structure and let's just look at the first up and then pull back, the higher high, then the higher low. During that higher high, we may have something like this, where we have a pull down, boom, we create that. Now we're in this leg of our higher high, and then we may get another break like this. And now we have something where people used to call them like change of characters, right? So you have this first change of character where this is a little bit complex, but bear with me, where you're bullish. So this is this leg here. It goes into complex structure. We're bullish. But as soon as this area here, I'll highlight this area really quick. When this happens, when we break this first low, we are now entering our complex pullback. So the way I know when prices go into reverse or go the opposite way, or just take me out, like I don't know if it's going to take me out, but what I do know is I could play it off of premium and discount, and I could also play it off of the complex pullback, which is price has broken this low. We are considered bearish, but not truly bearish. We're still bullish, but now we're expecting what? Like this was our higher high. We are expecting the higher low, right? Or something like this to continue. But that's not how it looks in reality. It's not always textbook. So usually what price will do is come react from something, or sometimes it'll go straight to the floor into our discount. This level is no longer validated, right? But let's say, for example, price actually came back up here, respected that. You get an entry here to go to the lows, you get another entry, you enter the discount. All this I'm expecting to get wiped out. So in this case, the complex pullback, we have our basic like change of character, or you could say break of structure, a structural break.
I
Then
see
we'll
that.
have our continuations. Then we'll have what? A change of a structural break. Remember, we are bullish, higher high, higher low, right? Remember that. But in this process, this is what it will look like. This is our complex structure. This is how
So
what
that would
I'm
look like a higher
expecting.
time frame structure, you mean?
Exactly. That'd be like our, say, our 15 minute, our 5 minute, even our 1 hour or something like that. But the
Right.
1 minute is looking like this. So people on the 5 minute, like, bro, it's just a pullback. People on the 1 minute, like, hey, we may be bearish. And then no, we're not. Like, we're not. So in this case, right, it's the same exact concept where price came up, right? Right here. We we sweep liquidity, we take this high out. Once we take that high out, now we're starting to get these moves to the upside. We're starting to get these waves. Once that last low that created that high was broken, I realized like, hey, we are in our complex pullback. Price could have came down with this candle right here and then pulled back. I would have looked for an entry to take to the discount to still get my buys, but price actually just went straight to the discount. And when we had our fib up, I actually from this low to this high, the 618, soon as price crossed that 50%, I am no longer interested in sales. That like price could stop at the 50% and fly away. So in this case, I'm like, we may be finalizing our complex pullback. Let me see what's gonna happen. The risk entry I want will be here on this area right here.
That's like a risky trade, you
Right
mean?
on, and yeah, this will be more of like, I wouldn't say a risky trade. It'd be more like, hey, you have no confirmation that price went from sales back to buys. You just assuming based on this structure, this bullish structure, that we're going to make that higher low and then we're going to go target that Asia high that we liked. You know what I mean?
Yeah.
So a risky trade would be like, let's say, let's say this wicked out this low and then I took buys and then I'm trying to target that high. It's like, no, bro. You officially embarrassed structure because we took out a key level.
Mm.
So this I call risk entry is because when we get down to this level, we not getting like bullish structure first to see that we make that move. We literally, soon as price come down here, boot, we're gone. Now if I want to enter off this nice level in the discount, as you see our 618706 level, like this level of demand here with the imbalance and the fair value gaps, even though we invalidated them, I was looking at this level as well. Now, the
That you could
reason
take a
I
trade
didn't
from?
take this, yes, the reason I didn't take it though is because you can invalidate fair value gaps, meaning let's say this entire area here is like a fair value gap. We have now a window of imbalance is something I learned like studying Phantom FX like a couple years ago. And yeah, you essentially all you have is just it invalidated. We going down to this downside is just you see the volume. There's no reason for me to take this entry risky, but this low that the last low that should hold is like the last person, the last wall of defense. That's what we should. We come down here, we wait patiently. I don't set limits. I market entry. I believe I got
You
in
market entry?
right. Yeah, I market entry
Oh,
a lot of
nice.
times, yeah, because I'm sitting on the chart. If I'm not, I'll set a limit, but more than likely I'm on my chart, so I'll market entry. When I market entry, I set my stop, I set my take profit on the 1 minute, especially a trade like this. I'm like, it's going one way or another. So we get in there, we start to get a pullback, and then I start to see this, and then next thing you know, I get my alerts. We hit a nice trade. This was like 1500 on both 50K accounts that I'm actually allocating right now. And I was like that, done for the day, lock my account out. It's nothing more for me to do. Now, we did have sales later in the day that when we talk about the complex pullback and all that and complex structure, liquidity and all that, we did have sales that went into that, but I didn't take those sales because it's a 50% rule on Top Step, as a lot of you guys do know. I talk about a lot too. So hitting 1500, if I make any more, I'm gonna have to make over the profit target. I'm just not gonna deal with it.
But that's on
So
the
I
challenge
just
though.
let yes, yeah. So this specific trade. Um,
So let me ask
going
you.
into the
Oh, you're not
mhm.
done?
No, you're good, bro. That's the 1 minute strategy that I use. On this day, there was an hour strategy as well. I'm not gonna go into that today, but the 1 minute strategy, all I'm looking for is the same exact things. I need three things for it to be key, and that's a sweep of liquidity, the displacement, and the fair value gap. If I don't have all three of those, I'm not interested in the trade because it shows that there was nothing there on that trade. There was nothing interesting about that trade. If you go back to anything that I trade or any levels that actually do anything special, that's what they have, and that's what I've gathered in my data and stuff like that.
I get that. So I have a question about you said liquidity sweeps. When I was looking at it, when you said liquidity sweeps, it just looks like structure. It just like the one
Mm-hmm.
minute structure. I can see from let's this is NAS. Let's see price point
You want to go?
21,875. You see 21,875. Just go to the left. 875. Yeah, right. The right yeah, right there. Where you see the change of structure, where it started to break structure right there to the left. You can see it.
Mm-hmm. Yeah,
When
yeah.
you said
This
yeah, right
area
there when
here.
you left, then it started creating bullish structure. It dropped back down and
Yep.
created bullish structure right there. And you said the sweep of liquidity with that candle. That's the trade that you took. It just looks like structure
This
to me, and it's about
this
the
candle
same
here.
thing that I do. We just call it two different things, but the sweep
Yeah.
like liquidity sweeps and stuff like that. It sounds just like structure, and you're using supply and demand. I think supply and demand also revolves around structure and how it works, but for the most part, I can see most of your concept and how it's similar to the concept that I trade. It's just more in depth and more detailed as far as the different terminologies that you use in
Yeah.
different areas of interest.
Yeah, most of it is terminology. Like most of it is the same. Like you like when you talk about structure, ton and VIP, I'm like he's like super correct because I could say like, hey, this is a sweep or hey, this is a sweep right here. But the only reason I'm deeming it a sweep or something important is really structure. But at the end of the day, I'll say, hey, like this level took something and then it went the opposite way. So I'm like, okay, I like that level. Some money into the market at that level. And then you can also say like, hey, price right here, we got some structure. Boom, we broke a high. We came back. All I seen was this candle take some lows. And I'm like, hey, that's a nice level. Because the level that I was interested in right here, knowing that that structural shift happened, price just didn't come back to that level in time for me to get into that move. And I was assuming that this was going straight for those highs, but I did want a 1 or 2 because again, time plays a huge factor in my strategy. So around this entry, remember I took the 1 or 2 on the day. I could have said, hey, I want to target these highs and been greedy, but the reason I didn't was because 9:30, it's 9:06 when I took this entry. 9:30 came around, and as you can see at 9:30, that volume kicked in and we reversed. And it took everybody who thought they was going to buy the market up or whatever out, got some sellers in, and then got more buyers in, took the sellers out. And then later in the day, it took all the buyers out. So it's just like I see the market, the algorithm just want to gather as many orders as possible. But like Keno said, like it's all the same stuff.
It's
It's
all the
pure
same stuff.
structure. Even the trend line is like, yeah, like I said, I could say, oh, this is a chain of demand, and I'm, looking at it like that. Oh, and then we got our mitigation here, and then we got
But it's
another
all
mitigation
structure.
of demand. It's all
You can
structure.
see
You
it's
just
just
need to
building
pay
up
attention.
structure and momentum going higher. And the trend
Exactly.
line is just
Yeah.
calculating structure going higher. It's all pretty much the same thing. So question, from
All-
what time to what
mhm.
time do you think you trade?
So more times than likely, I'm in Texas, so I'll do New York's time. It's 8:30 New York time to about 11:30 New York time. And I'm not really entering after 10:30, but 11, a lot of times that I'll look at price because you may be having like that what is he called? After lunch setups and stuff. So
Mm-hmm.
maybe something like this day, like later in the day, the setups was crazy. And I'm like,
Mm-hmm.
hey, if I see something happening, then I'll come back to the charts. And if I see something, if I didn't hit my goal on the day, profit goal or something, then I'm like, hey, I may look to enter or something like or see what's going to happen in that case. So I'm usually 7:30 Central Standard Time to 10:30 or 8:30
So
to
that's about
11:30
three
Eastern
hours.
Standard. 3 hours, and most of the time I'm done by 9:30. Some of the times I'm done around 10. Some days I just don't trade and I don't have nothing. So
So question, how much
that's
trades do you take per day
so on this day,
on a regular day,
if I'm
just an
trading,
average day?
yeah, on the average day, I'm t like 1 or 2 max. When I'm trading a 1 minute recently, because I know how to, I can go in the market and get a 1 or 3 or 1 or 4, like it's nothing with the 1 minute. So like this day, I took this trade here, this sell to take out this low. That was a 1 or 2. I took this buy and then I took this buy. So that was 3 trades on the day. And the same reason I took this level here is because it took out these highs. We got displacement to the downside. I enter here, put my stops here. As it's running up, I like to enter as price is running up. It gives me confidence as well. And then entering at the low hanging fruit. This is a weak low. It's another liquidity thing. But again, it's just a structural point that couldn't take out the highs. That's his job. And then we took out that low and then go from there. So On the average day, 1 to 2, but on this day specifically, I had about three.
Okay, average day 1 to 2. How much would you say you're risking per trade to make money?
Yeah, so on MNQ, I'm risking like $200 to $400, and then if I'm trading NQ on the 1 minute, it's like $350 to $500, and then I want to minimize that a lot more. I want to keep it like 300 for all my live accounts on NQ, but that has you have to start to have a fixed stop loss and all that. So I kind of limit myself in that way. It's like, oh, it's not a 10 point or a 20 point, then I can't go. So what I'm trying to do with that risk management side, or I'm not gonna say what I'm trying to do, what I'm doing with the risk management side is figuring out how I'm gonna dial it down to 300 to 400 max per trade if I trade NQ. And then on my MNQ is gonna be like 200 to 400 still, keep it in that
So
ballpark.
do you have a dynamic risk, do you say, or is it has to be within the 10 to 20 points? And if it's
No,
over
it's
that,
it's
you're done.
pretty Yeah, it's pretty dynamic to be honest, because one thing I think about when I was working on, because on the weekends I take the time to like not really I back test and stuff, but I would go back into the week and be like, all right, when it comes to risk, that's all we can control. What could I have done better as far as my risk? What areas did I open myself up to stupid, risk or anything like that? So what I'll do is like, hey, I'll see like this trade had a 60 on a 1 hour had a 60 point stop, and then this one had a 30 point stop. Well, this one with the 30 point stop, in my opinion, is going to be a lot more high quality, regardless if I lose or win. That doesn't determine it. It's a higher quality trade because I get to manage my risk better, because 60 is way over what I want to, it's double what I want to risk.
Right.
So I base it off like what's the higher quality, it's dynamic, but that 60 point stop, hey, like that might be like that. I'm 99% confident. You feel me? So
Right.
I might risk $800, but I'm taking it. And then let's say if I wanted a 1 to 2 and I'm up like 1,200, but I only risk 800, I'm gonna take the 12 because I know my risk. One, I don't break even on the 1 hour trades. I break even on
Mm-hmm.
my 1 minute trades. So it's like just kind of dialing everything together. On my 1 minute, I'm breaking even. So a one
Where
to
you break
two, if
even?
I'm
One to
there,
one?
I'm one. I break even at the high. So say for example, like with this trade here, soon as these highs went, I broke even. And then I was like, yeah, I'm out of there. I'm not interested in more.
That's
Or this
break
trade,
even or leaving?
nah, like break even. So like this trade here, the high that gave me my entry was here. So once that high goes, I could break even. This trade just hit super fast, so I didn't even have to.
Okay, okay. That's fire. That's
Yeah.
fire. So
We
when
got
you
like
uh-huh,
three
go ahead.
minutes too. Yeah.
Go ahead, bro.
No, I was saying we got like 3 minutes, but yeah.
I solid trading strategy. Most of it I can relate to because I do most of the same thing. I'm a 1 minute trader just like you. We could just end it right here. Thank you for showing me your strategy. I know my viewers are going to love this. And if you want to know more, where can they follow you? Where can they find you? I leave all of it in the description, but just let them know.
Yeah, look up, it's Divine Williams, Professional Profits. My whole thing is becoming a professional in life at everything you do, 10,000 hours. So Divine Williams, Professional Profits on YouTube. I believe the handle is Smartmoneygoat, but just look up Divine Williams. He'll put it in the description.
I'm gonna leave it in the
And then
description.
y'all,
No worries.
yeah, yeah. I don't do I used to have TikTok and IG. I don't utilize those at the moment because it's pure distraction. I'm focused on something
Mm-hmm.
bigger. So follow one course until successful. That means focus. So yeah.
All right, y'all. Let's get up out of here. Peace.